when we come in and we're now, we have a call center that they can call and rent a unit anytime. You can rent a unit from the website and get access to the gate, and implement more professional management. We're able to already see increases in occupancy, increases in NOI, and just fix the model that he had been using. So that's our whole model, basically, is buying from mom and pops that are not, running assets as well as we can, and, increasing the value.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Andrew Keel owns and operates 33 mobile home communities and 5 self-storage facilities. His specialty is buying from mom and pops and improving the bottom line. Andrew, welcome to the show.
Yeah, thanks for having me, Sam.
Pleasure's mine. 3 questions I ask every guest who comes on the show in 90 seconds or less. Where did you start? Where are you now? And how did you get there?
Started in Central Florida, flipping houses in the residential place. Moved into individual mobile homes, doing what's called Lonnie dealing, where I was selling individual mobile homes on contract. And then ended up going to a boot camp, MHU boot camp, and met a investor there that was looking to deploy some money. Wanted a sweat equity partner like myself. So we ended up partnering on my first 5 mobile home parks together. Since then, friends and family have jumped on board and wanted to invest. And we also got into self-storage last year, which has absolutely crushed. So really feeling good about our portfolio going into uncertain economic times.
When or what year was it that you bought your first mobile home park?
2017.
Wow. That's pretty fast growth from 0 mobile home parks to 33, I think is what you said there in your bio. That's a lot. What is that? I mean, it's only 5 years. That's 6 parks a year, basically.
Yeah, just about. The one thing I did is I burned the ships, right? I left everything else, my home flipping business, my individual mobile home flipping business. I left everything behind and just went all in on this. I saw the opportunity, and it ended up being well worth it.
Now that's really hard to do, because I'm sure that your home flipping business was fairly profitable.
It was, yeah, around the Central Florida area, and then these Lonnie deals. I was buying these individual mobile homes, fixing them up very little, and then selling them on contract. And I was getting what's called mailbox money, right? Which Lonnie Scruggs talks about in his book Deals on Wheels, and that was going great. But that income from those previous homes I had sold really kept me alive when I just completely went full into mobile home communities. So that's how I was able to do it.
Yeah, that's I think that's important, to note there for people that are looking to scale, is having that not the backup, but having that income while you do scale. How long did it take you from, hey, I'm going long into mobile home communities in 2017? Like, how many months was it before you actually got your first deal done?
Oh yeah, I wanted to buy a park in 2015, right? And then the time it took to get there, and the sales funnel and so forth, it took about 1.5 years. So it definitely took some time before I actually got one.
Right. And I think that's something people overlook, when they're looking to grow. And you hear the success stories where it's like, hey man, one day I woke up and then 3 weeks later I own 10 mobile home parks. You're like, okay, whatever. You're not the normal person out there. The rest of us, it takes 18 months of blood, sweat, and tears to finally get that first one done. And from then, of course, it becomes easier. It's getting the first one across the finish line. Tell me this, things are changing in the mobile home community space. Like, we've just seen cap rates compress. We've seen hyper competition come in. What else has gone on in the space? And then what are you doing to still find a competitive edge?
Yeah, we have a lot of institutional buyers coming into the space right now, a lot of big time private equity money coming into the space. And it's tough to compete, right? They've driven cap rates down. I think one thing that we've done to kind of carve out our niche is, we've gotten really specific on our strike zone, right? Like, we buy properties between 50 and 99 lots. A lot of the bigger boys want to buy 100 lots or more. So we target 50 to 99 lots. We target public utilities in a metro with 50,000 or more population. And, that has really been a good strike zone for us. We've had to say no to a lot of deals, but it also keeps us it keeps us on track with where our time is best used.
Yeah. So you gave 4 criterias for things that work for you guys, and it sounds like you're still able to find opportunity, even with those 4 criteria.
Yeah. It's been great. Last year was a lot better than this year. Honestly, we were able to our sales funnel kind of peaked, and we closed on, a handful in 2021. 2022, it's gotten tougher to find those deals that hit our strike zone. So we spent a lot of time in storage, the last year because of that.
Right. And that's also something, though. You're in 2 asset classes that are fairly popular. I would think there's more storage facilities than there are, mobile home communities. So, but even so, it's still a competitive, storage is a competitive space to be in. Why the transition? Was it just because the mobile home communities were just, too competitive, or was there a strategic move as part of that?
Yeah, we like the complementary factors that they have with our management and oversight of them. And then also it was strategic in the fact that, self-storage facilities, they have some benefits that mobile home parks don't, right? They're a little bit easier to manage. However, the supply is not constrained just, as mobile home parks are. However, we can buy in certain markets from mom and pops that, we bought a property in Round Rock, Texas, just outside of Austin. And we bought it from a mom and pop owner. We direct to the owner, and the facility was only 82% occupied. It's your typical mom and pop story, right? All the other facilities in the area are 95% occupied or higher. He was operating the facility on a flip phone, and he was only open 3 days a week. If you wanted to rent a unit, you had to be there Monday, Wednesday, or Saturday. That was it. So when we come in and we're now, we have a call center that they can call and rent a unit anytime. You can rent a unit from the website and get access to the gate, and implement more professional management. We're able to already see increases in occupancy, increases in NOI, and just fix the model that he had been using. So that's our whole model, basically, is buying from mom and pops that are not, running assets as well as we can, and increasing the value.
And those aren't even expensive necessarily operational. Like there's no major CapEx. Yeah, there's some software that goes into that. There's some human, capital in the sense that you got to pay to have the call center answer the phone and things like that. But it's not, $1 million in CapEx you got to dump into the property. It's just a very simple, hey, here's some operational tweaks, and you can change the bottom line dramatically.
Dramatically, yeah. And obviously in storage, one thing, like probably the biggest value add component is that the mom and pops are not raising rents with market, right? They just get comfortable. They think that 100% occupancy is good, and that's where they're supposed to be. Well, actually, in storage, you actually want to be around 90% occupied, maybe even a little bit less. Wow. Because if you're not filtering through and you're not raising rents enough, then you're not maximizing the NOI.
Right. Yeah, and I can't do the math fast enough on here, but I know that there's a, here on the fly, but I know there's a point where it's like, hey, it's better to be 90% occupied at X than 100% occupied at Y, whatever that is. Yeah, so that's really, really interesting. Yeah, we're experiencing that right now on a multifamily property we own. We just hit 100% occupancy, but we have raised rents so fast, and it's still, the demand is there, and it's like, what are we doing something wrong here? Because we bought it last year and we're already $400 a month, or $400 a month per unit over where we bought it at. And it's like,
wow.
And we're still not, or we're still at 100% occupied. So I get that. That's a hard thing for a lot of people, though, especially mom and pops, because they go, hey, you know what? I'm fully occupied. I don't have to think about it. I can collect the check and then I go home. How do you find those sellers, and how do you find an opportunity that makes sense like that? Going all the way to Round Rock, Texas is a long way from Orlando, Florida.
Yeah, we have a whole sales team of 5 cold callers that are cold calling and reaching out to owners constantly. We have 3 VAs that are skip tracing and scrubbing our data. And that's really been our competitive advantage is being able to go direct to these owners, contact them, cultivate relationships with them, and then, ultimately buy their properties.
Right. Yeah. What's that conversation like right now when you're dealing with these mom and pop owners? Are they aware of, the interest in the self-storage space, or is it, still the maybe 5-7 years ago where you get an off-market deal and it wasn't quite as difficult?
There's always deals out there, right? One of my mentors, Scott Shields, he says, "Hey, the deal of a lifetime comes around once every 6 months." There's deals to be had, but yeah, I would say sellers are aware that their assets are desirable and they're wanting higher prices than ever before. And I think the competitive advantage is the market research that we're doing to look at the competitors, to look at the facilities, and really be able to underwrite based on what it could be instead of what it is today.
Do you guys have you guys taken any deals down from brokers?
We have, yeah. I think probably 3 or 4 we've taken down from brokers. There's deals out there from brokers as well. You just have to be at the right place, the right time.
Right. There's talk of us going into a recession, and you are in 2 unique asset classes that generally bode fairly well, especially the mobile home communities in a recessionary environment. Is there anything you guys are doing to position yourself, or maybe doing differently than what you were a couple of years ago, as recession seems to be on the horizon?
Yeah, great question. I think mobile home parks in and of themselves are the most affordable form of non-subsidized housing. Right. So that, in a recessionary environment, has done pretty well. And if you look back at the previous recessions, you'll see mobile home parks have done well, right? Because typically our tenants own their homes and they're just paying a very nominal amount for lot rent to have their home on the property. So mobile home parks are moated in that aspect, not completely, completely untouchable, right? In a recession, I think everybody feels it in some aspect, but mobile home parks are in a good spot. Storage as well. It's interesting because storage has an interesting dynamic where when people are moving up, right, they're upgrading their housing situation. They need more stuff. When they're downgrading their housing, it's the same thing, right? They need a place to store their stuff. And in a market like today where people are preferring to rent, self-storage has done really well.
Right. Yeah. There's, and I think that's the thing that's fun about self-storage is that there's the reasons for why, and like you said, the reasons why people use storage varies no matter where we are in the cycle. There's a certain section or a certain set of the population that needs storage for various reasons. So in a recession, businesses are downsizing. Like, okay, well, now they got to have a place to put all this extra stuff they have, or businesses are upsizing. Well, now we're building a new facility. We got to have a place to store stuff. I mean, whatever it is. So I think that's really, really cool. What if you could rewind, maybe, I don't know how long or when you started in real estate, but whenever it was you started in real estate until now, and you could say, hey, here's a mistake I made that I think other people could avoid making, what would that be?
Wow, that is a great question. I would say setting better systems earlier in terms of hiring. Right. So when you're hiring people, you don't, in the moment, you're like, okay, it's like you got a ship and you got a hole in it. You're like, all right, stick a cork in it. Let's just keep moving. Right. Well, really, if you slow down, you take the time to set up a system, set up a training, you can really help yourself down the line when you need to replace that person or when you have turnover. So I would say slow down and really implement good training in the beginning instead of trying to go really fast. That's something we've had to go back and do. And, we're able now to move so much faster when we do have turnover because we have good training systems in place. The new person's able to get caught up very quickly.
Right. And that's, I think that was something I read on a LinkedIn post yesterday, was that the average entrepreneur really struggles with the documentation side of it, especially early on, because, it's fast if I can just do it myself right now. But then documenting this process takes 5 times as long. I don't have time for that. But then it's this, you get caught there in the middle. So setting better systems when hiring. Now that's an absolutely great one. I certainly love that. Tell me this, you're an Ironman triathlon runner, if I'm not mistaken. You do.
That's
I don't
right.
know how many of these you've done up till this point. Are there correlations between what you do in business and how you run a triathlon?
Oh, 100%. I would say it's less about how I run a triathlon and more about the whole process, right? The training, the discipline, what I put in my mouth, eating wise, the burning drive that I have to be successful. All of that, it correlates to training for triathlon and competing in Ironman races. So I would say it has helped my business goals and complemented them, and has kept me driven, kept me on track, kept me disciplined. When I don't want to wake up at 5:30 one day, I'll pay for it if I don't. Right. So it keeps me on track.
Right. Yeah, absolutely. Absolutely. Yeah. You mentioned something in there, but you said process. Can you expound on that some?
Yeah. Specifically with triathlon, like, for example, I just competed in Kona, in the Kona, Hawaii 70.3 race last week. Wow. And the process of preparing your bike, making sure that you have, good tubes and tires on, and making sure that your batteries are charged for your GPS and your gear shifters, and the whole process of being organized and like you said, setting a system in business is the same thing for triathlon. And that's not even including the training, right? There's a coaching program. I have a coach that sets up my training regimen. And again, it all correlates to my business and how I run that as well.
Right. No, I think that's absolutely cool. And congrats to you for finishing that race in Kona. Was that your best time? Was it your worst time? How'd you do?
It was not my best time, but I did pretty well. I got 16th in my age group. There was like 84 people in my age group, I think. So my age group's pretty competitive. It's the like 30 to 35 range. Wow. But I had a great time. It was a beautiful race. Literally, the swim was like swimming in an aquarium. I mean, I was seeing stingrays and colorful fish. It was beautiful.
That's absolutely awesome. I don't know. I don't know many people that get to say that when they run a triathlon, that it was like swimming in an aquarium. That's awesome. Andrew, what? Let's talk about. I had one question here I forgot to ask you. When it comes to mobile home communities, something we're seeing right now is on the financing side of things. Financing's changing. Lending is getting really kind of wonky out here as lenders are trying to find their footing in the marketplace, going, where are we going? Interest rate rise. What are you finding right now in lending on mobile home communities?
Yeah, interest rates are going up for sure. But there is really good options when it comes to financing manufactured housing communities. The best debt is typically by the agency lenders, Freddie Mac and Fannie Mae, typical, similar to multifamily. Where you're able to get 10-year fixed rate debt and interest only periods. We just locked in a really awesome refinance loan before rates started ticking up on about 7 of our mobile home parks, and we're able to get really great. We did very low leverage. I think it was 65% LTV, 10 years fixed interest, and it was full term interest only. So, very attractive financing terms. And that's through the agency lenders. Your property has to meet a certain criteria. It has to be, there's a whole list, but over 90% occupied, less than 25% park owned homes. It has to have off-street parking and, some other attributes that when we buy properties from mom and pops, typically we're getting like a regional lender to finance that. And then our whole goal is to fix these properties to get them to qualify for the agency debt. And that is like our home run.
Right. Because then you can refinance it into agency debt. And then what's your plan? I guess, what's your exit strategy on these? Is this a hold in forever?
We're buy and hold. Yeah. I'm 34 years old, want to own these assets and fully depreciate them. That's what our investors are looking for as well. And it's been a win-win for us to be able to recapitalize the asset, pay back the initial equity, and then, hold them long term.
That's awesome. I like that in comparison to, a lot of the deals we're seeing right now that are coming across my desk, are stuff like, hey, 3 to 5 years, we're going to sell it. We're going to, get a 2x equity multiple and move on. I think people's appetite, at least I've found, is really changing dramatically. They're going, okay, we really don't care about the equity multiple or the appreciation play. We just want to clip the coupon. I think of the last 100 investors I've talked to in the last 4 months, they probably have all said the same thing. Like, we just want to collect the cash flow. So that's very, very cool. Andrew, thank you for taking the time to come on the show today and really talk about mobile home communities, the opportunities you're finding there and how you're finding them. I mean, having 5 cold callers and 3 VAs, full-time skip tracing, that's a lot of people doing a lot of outbound lead generation. I think that's super cool. You've shared with us the way, that you prep for an Ironman and how that correlates there to your business, and then also how you're finding opportunity in self-storage. So you guys are doing a lot of really cool stuff. Certainly appreciate you coming on today and sharing. If our listeners want to get in touch with you or learn more about you, what is the best way to do that?
Yeah, the best way for them to do that would be to go to keelteam.com. That's just KEELTEAM.com. You can fill out a contact form if you're interested in investing with us or partnering with us.
Awesome. Andrew, thank you again. Certainly appreciate it.
Yeah, thanks for having me, Sam.